I love gold. The look of it, the taste of it, the smell of it, the texture.
You've heard a lot of people talk about the gold standard, some pros, some anti. Today we're going to explain what the gold standard was, why it mattered, and why it has something to do with the massive inflation that we are seeing right now that no one is on the gold standard. This video is sponsored by ExpressVPN. So to really start the timeline of the gold standard, at least as far as the United States is concerned, you have to go back to 1834. In 1834, this is when the United States sort of informally goes on the gold standard. The gold standard, to put it in the most basic terms, is the idea that a dollar, for example, in the United States, is tradable for a certain amount of gold. This means that your currency is based on its convertibility into gold. You could actually go to a bank and you could convert your money into gold. And this meant that governments couldn't just inflate the currency, because that would have caused a run on the bank. It would have caused a run on the central banks.
There's something wrong. The bank won't give someone their money. Well, I'm going to get mine.
It would have meant that you would have taken all your dollars and immediately gone and bought gold, because you're afraid that tomorrow you won't be able to get as much gold for your dollar. This leads to stability. It leads to predictability. This leads off a period of significant economic growth for the United States, but it really doesn't take off until the period between 1870 and 1914. At this point, you really get the international gold standard. This is known as sort of the classical period in the gold standard, and it was really backed not by the United States, which wasn't the most powerful economic force on earth at the time. It was really backed by Great Britain and specifically the Bank of England. And the reason that the Bank of England is backing a lot of this is because it has enormous stores of gold. What you're going to see is massive inflation in prices in places like Britain, because everybody's trying to buy product in Britain. Okay, so what you're going to see is gold outflows from the United States to Britain. So Britain now has a lot of gold. You're also going to see massive price inflation in Britain. Well, that price inflation requires Britain to now bring down the prices. The way they bring down the prices, because you have an overheated economy, is you see them starting to raise the interest rates. Raising the interest rates slows down the economy. It means that the prices become more competitive in places like the United States, and suddenly you see an outflow of dollars back to the United States for American product, and those dollars are then used to bring gold back across to the United States. In other words, the thing that keeps all of this moving is a certain level of honor.
Irish honor system. Please serve yourselves. Put the money in the bucket. Thank you.
Now, there are certain countries during this time that cheat, but they're sort of half on the gold standard, half not. They're inflating their currency, they're not inflating their currency, they're sponsoring certain manufacturing policy or not sponsoring certain manufacturing policy. But if you look at a chart of GDP growth globally in this period, it's very, very high. You're starting to see tremendous levels of international trade. You're starting to see predictability and better economic policy driven by the fact that you can't artificially just boost your economy by printing dollars, for example. There is a baseline level of the currency, and a dollar today is going to be worth a dollar tomorrow. So you get an economic shock in 1848 when the supply of gold dramatically rises in the United States. When the supply of gold dramatically rises in the United States, that means basically there are more dollars. When there are more dollars, then those dollars can now be spent more easily. This keeps everything really pretty stable. Then, during World War I, everything starts to break down because countries need to borrow a lot of money, and they need to spend a lot of money in order to pursue war. So you see this breakdown that happens right around World War I. That's this period right here. Then, after World War I, there is sort of a brief return to the classical gold standard, and that happens in this period. Right, so you have the international gold standard during this period. Then, the Great Depression happens. And suddenly, Britain realizes that they've got a problem. The problem is, if your currency is tethered to gold, and if you need to take out massive debt, then what do you do? How are you going to pay that back? You might not have enough gold in order to actually pay for all that. People believing that you're never going to pay back the debt are going to go grab the gold. They're literally going to go to the central bank, they're going to take their pounds, and they're going to convert them into gold. They're going to take, in the United States, their dollars and convert those into gold. And so if you need to spend a lot of money, which is what everyone thought the best economic policy would be in 1929 and on, then you're going to need to generate the ability to create debt without the risk that people are going to take all of their current paper dollars or their pounds and go to the bank and then just take out all of your gold supply, which debases your currency. So in 1931, you see that the UK breaks with the gold standard. In 1933, the United States nationalizes gold held by private citizens and prohibits convertibility, which means that I can no longer take my dollar and then go over to Fort Knox and say, I want a dollar worth of gold, give it to me. They then changed the price of gold. They pegged the price of gold to $20.67 per ounce. What you're really doing is you're saying that to foreign governments. So foreign governments were still allowed to convert. American citizens couldn't. Right? They basically centralized all the gold in the United States, which allowed them to create a greater stockpile of gold. But They allowed foreign governments convertibility, and that convertibility allowed for the continuation of an international gold standard. In 1934, FDR decides he needs to spend even more money. So he changes the price of gold arbitrarily to $35 an ounce. People inside his administration at the time are saying that he's literally picking the price of gold on a day-to-day basis based on his lucky numbers, which does not go much to stability, and it doesn't go much to predictability. It does go to flexibility. And so supposedly this flexibility was necessary in order to get us out of the Great Depression. I think that that is wildly overstated because, of course, he basically deepened the Great Depression by something like 8 years. In the aftermath of World War II, there's a big meeting over at Bretton Woods. Bretton Woods is a place in New Hampshire. There's a big meeting of all of the world's economic experts, and they decide that it's time to get off the gold standard, but they still kind of need to be on the gold standard. So they come up with this sort of jerry-rigged system. The United States still tethers its dollar to gold, and then all of these other currencies tether their currencies to the value of the United States dollar. So instead of them being directly convertible to gold, so like a pound convertible to gold, now the US becomes the world's denominated currency. Let me ask you something. What if there was someone out there who kept a log of every single thing you did, every minute of the day? I'm not talking about Santa or God. I'm talking about big tech. What if I told you that's exactly what big tech is doing every time you go online? Your internet provider like AT&T or Comcast, they are allowed to store logs of every website you've ever visited. They can legally sell that data to anybody, which is why I use ExpressVPN. ExpressVPN reroutes your internet connection through their secure servers so your internet provider can't see or log what you do online. Now, I know you're wondering, well, if I'm routing all my data through a VPN, doesn't that just mean the VPN can see what I'm doing and log my data instead? Ah, excellent question. ExpressVPN is the only VPN I trust because they use trusted server technology. They were the first major VPN provider to engineer all of their VPN servers to run in RAM, which makes it impossible for their VPN servers to store any data, including logs of any ExpressVPN customer. You don't have to take my or ExpressVPN's word for it. ExpressVPN is so confident in their no logs claim, they even had one of the biggest assurance firms, PwC, audit their technology. All you have to do, you grab your phone, you open it up, you find ExpressVPN. Then it says not connected. This makes you sad, but you hit the button and now magically you're connected, and this means you're protected. So stop letting people keep logs of what you do online. Visit expressvpn.com/BenYT right now. Find out how you can get 3 months for free. Again, that's expressvpn.com/BenYT to get started today. So the United States basically becomes the world's default currency because, frankly, we're the only economic power on Earth after World War II. Everyone else has been wrecked. Asia is not a world power by any stretch of the imagination. The USSR is a backwater. All of Europe has been destroyed by World War II. And so everyone is now reliant on the United States to hold to its commitment that it is going to allow for its conversion of dollars into gold for foreign governments. Also, there is the creation of two major multinational organizations. One is the International Monetary Fund, and one is the World Bank. The idea is that these are basically going to be there to allow for governments to take out debt. But there are going to be conditions attached. If you take out a loan from the International Monetary Fund, then you are also going to have to, say, loosen your trade restrictions, or you're going to have to get away from government nationalization of industry. This has tremendously positive effects for world trade. If you look at GDP growth per capita, basically what you see during this entire period is that you see kind of steady growth, and then it starts to take off right after World War II and just goes exponential.
Millions of Americans are waiting for a chance to buy the new products and new gadgets they have read about, to replace what has worn out during the war.
Because people start accepting the premises of free trade. There's also brand new inventions, a lot more travel, and because the world is no longer at war and the USSR is an economic backwater, this means that you get a lot of trade. All of this starts to go a little bit south in about 1958. The United States gets really high on its own supply. So in the 1960s, we start saying, we are the world power. Time to end poverty. Poverty's over, man. War on poverty. Let's blow out the spending. Well, the problem is when we blow out the spending, you end up with actual inflation. Right? That inflation, which starts to set in the 1960s, the world has to accept dollars. And so the US economy has too much power to set the rates. Basically, we are now determining exactly what the value of the US dollar is, and everybody's supposed to rely on us not to break our responsibility to keep our dollar tied to a particular price in gold. But we want to spend a lot of dollars, so we're taking out all sorts of debt, and we're relying on everybody to buy that debt, and we're relying on people to use dollars, and we're relying on them to do all of this so we can fund all sorts of domestic growth opportunities. Problem is, this creates, as you'd imagine, gold outflows. A bunch of other countries start saying, well, hold up, I don't want to invest in the US dollar because frankly, I don't think that eventually you're going to pay this stuff back. I don't trust you guys to keep to your commitments. So you start to see inflationary pressures and foreign distrust of the United States, and this is starting to result in everybody starting to take gold out of the United States. And so in 1971, the U.S. does the first predicate to ending the gold standard entirely. The U.S. closes the gold window.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
So the gold window is now closed. What this really means in real terms is that the gold standard is done. Now the United States dollar is going to be based not on its peg to a value of gold. It is instead going to be based on something completely different, the full faith and credit of the United States. And we are going to start a system whereby the Federal Reserve starts to really inflate the currency like a couple percent every year. And this is what we saw over the course of the last couple of years. One problem with that is that eventually the debt comes due.
You said I wouldn't have to repay it till the future. This isn't the future. It's the lousy stinking now.
One of the big problems that you're seeing right now is the possibility of the United States dollar disappearing as the world's reserve currency. So as we've said, the US dollar has been the world's reserve currency really since Bretton Woods, since it was tied to the gold standard. And then post Bretton Woods, it's still the world's global reserve currency. That's largely because the United States is the world's largest, most cohesive, and most robust economy. However, that relies on the United States remaining the world's most robust economy. If we continue to take bad regulatory policy, bad tax policy, bad fiscal policy, if we continue to blow out our debts, and it's a point where people don't think we're going to pay back those debts, people are going to start searching in other places for reserve currencies, which is why you've seen people, crypto, for example. It's why I've seen countries that don't like the United States talk about not dollar denominating their debt anymore, but instead say yuan denominating their debt. Right? This is something that the Saudis have been talking about a little bit right now. So again, once you unmoor from gold totally, and you don't have total currency convertibility the way that you once did, then you end up with a system where a lot more trust, ironically, is required than in a system where everybody could convert from one thing to another. And right now, does it look like the world is a very trusting place? It makes everything feel very, very unstable, for good reason. The point of talking about the gold standard is to remind you that when you have currencies that are only rooted in full faith and credit of governments, how much you trust the currency is basically a function of how much you trust the government. So how much do you trust the government?